Cheesecake Factory. Ticker symbol on this one is cake. I mean, it doesn't get better for a ticker symbol than cake. There's nothing better than that, right? So a very low risk stock with absolutely insane reward. The stock's up about 38% over the past year, and just because it's done very well over the past year does not mean it's going to stop doing well. I think the best days are definitely in front of this company. Now you might hear Cheesecake Factory and you obviously think of the insanely successful brand, the Cheesecake Factory, right? And you might say, okay, very successful restaurant, one of the most successful restaurant chains in the history of mankind, literally, right, in the world. And you might say, what's the big deal? Like, okay, Cheesecake Factory, like, cool. Like, what is it about this company? Well, something massive with this company. And it's really two massive things that are game changers for this business model and for this stock price moving forward and why this stock's going to be an absolute beast. Number one, this company has not one, but they have two major hit concept restaurants that they're basically going to expand rapidly over the next 10 plus years with. I can tell you this is special. The first major hit concept is Flower Child. And then they have a second major hit concept in North Italia. And so these concepts, you're going to see them expand into every major city pretty much across the entire United States of America over this next decade. And you're going to see it everywhere. And I can tell you, this is the only company I know of, and I look at all the different restaurant companies, that I am sure they have two major hit concepts on their hands over this next 10, 20 years. There's not one other company that I'm convinced they have two major success concepts over this next 10 years. And so what we're going to see play out is North Italia and Flower Child are going to move into every major city across the United States of America over this next 10 years. And that's when you have a truly special restaurant concept. It's one thing if you can be regional and you can just be in a region. It's one thing if you could just be successful in a state. If you can go nationwide across the entire United States and open up 100, 200, 300 restaurants, maybe even more than that, and be successful, and it doesn't matter if you're in Maine or you're in California, that's special. And they're the only company that I have ever found that actually has two legit, super successful major concepts coming down the pipe here, okay? Now, additionally, they have these other, what I call potentials. The Culinary Dropout, Blanco, and Doughbird are all potential next hits, but those aren't for sures. North Italia and Flower Child at this point in time, I'm 100% convinced those are going to be massive across the entire United States of America. Culinary Dropout, Doughbird, and Blanco are still like in that question phase. We got to test more of these restaurants in more markets, and then we can figure out maybe this is just going to be 10, 20 locations, right? Or maybe it's going to be one of those we can call it 100 plus location opportunities. We have to see. Those are potentials though, okay? Now, when it comes to cheesecake, the great thing with this company is I can count on this company growing revenue year after year after year after year with not only what they obviously have with the Cheesecake Factory, but then with all the expansion opportunity with North Italia and Flower Child, and then the potential concepts, right? That leaves revenue growth year after year after year coming for this company, which is very exciting. The trend is your friend. And the great thing with Cheesecake is their earnings per share is absolutely blasting higher. And I think we're still at early stages of this kind of earnings per share recovery coming out of Rona, right? Rona obviously was devastating to all restaurant concepts, right? It just was what it was. Devastated them. And then when we finally got to open back up, it was partial opens. That's a thing of the past, certainly, right? And then 2022 came, companies were kind of getting back on the right track with their earnings per share. And then 2022 came, highest inflation we've seen in many, many decades. It hurt a lot of companies heavily, including Cheesecake Factory. But that is a thing of the past. We got past Rona. We got past the highest inflation in decades. And now we're back on the right track when it comes to earnings per share. And I'm looking for earnings per share to just continue to increase even as they expand. And you're going to see more. The great news is as they expand more Flower Childs and more North Italias, the profitability is going to increase pretty rapidly for this company because those concepts can get to profitability so quickly. And as a company, as those brands get more known across different cities, across the United States, like it's going to be one of those things where from day one, right, they're already going to have the doors packed. And that's going to be extremely, extremely powerful. For right now, they're still kind of somewhat newer in a lot of these markets, right? Now, Cheesecake. The incredible opportunity here is the valuation. The valuation, 12 forward P, 11 2-year forward P. I mean, this is a company that, has insane growth over these coming years. Next year, earnings per share growth expected by analysts here is around 14%, with over 8% revenue growth expected. And when you think about the next 10, 20 years for this company, trading at a way below market multiple does not make sense at all. And that's where it's trading at. Right now, 12, I mean, you could say the market trades at like a 20 forward P roughly. So that's just crazy. Now, if I compare them, if we want to play the comparison game, because there's other options I could purchase. Texas Roadhouse, I made a lot of money on that stock in the past. Really great company. Phenomenal company. But the problem with Texas Roadhouse, they don't have a for sure next banger concept. They have a couple, they have Jaggers they're trying out, which is like maybe it's going to be, maybe it's not going to be. They have Bubba's 33, which is like maybe we don't know, but they have their all extremely successful Texas Roadhouse brand, right? And so Texas Roadhouse is a little bit more of a question mark because they don't have those bangers coming behind them like Cheesecake does. And then we go look at something like a Chipotle. Chipotle is Chipotle, right? They're like, obviously extremely successful concept, insanely famous. And Chipotle, the one thing that Chipotle certainly lacks is certainly another brand. So when Chipotle brand is hurt, it actually can negatively affect the entire Chipotle company. And we've seen that actually recently in regards to this recent situation, right? Which I don't need to go down that rabbit hole because I don't want to make a 10-minute video about Chipotle. And then obviously we saw it with the health situation they had back in kind of like 2015, 2016 time. So Cake is going to outgrow, in my opinion, Texas Roadhouse and Chipotle from 2025 to 2035. If you're just talking about the next year, I think Chipotle outgrows Cake. But if I'm thinking about the next 10 years, I think Cheesecake's actually going to outgrow Chipotle quite significantly because Chipotle will start to reach saturation here in the next year or two in regards to locations. Some cities are already starting to get saturated. I mean, most people in the United States are kind of living within if you look at every major city, I mean, people are living within 10 minutes of Chipotle now at this point in time. So now it's going to get tougher and tougher to really find locations for Chipotle that can be ultimately profitable in a major way, right? Cheesecake, because they have those two major concepts, they have so much expansion opportunity over this next 10 plus years. And so I look at Cake, I see a company that's going to outgrow Roadhouse, outgrow Chipotle, and I don't even think it's going to be close. And yet the valuation, forward P of 12 on Cake, 26 on Roadhouse, 47 on Chipotle, it's not right, man. It's not right at all. If we look at valuation tool here on 1000xstocks.com, the valuation model, I ran Cheesecake numbers as the following. I ran them at 9% revenue growth per year on average over from 2025 to 2028. That would put them about $5.1 billion in 2028. I ran them at a net income growth of about 12% per year during that time. I think they'll get a little leverage in that bottom line. Net income margins of 5% range. Come 2028, which is not high, but it's a restaurant industry, so generally net margins are low in this industry, right? If you're growing top line 9%, bottom line 12%, and you're a consistent company that's proven, you could probably command somewhere between about a 22, 27 PE. And so that would put the stock price at somewhere between about $103 and $127 come 2028, which would be a compounding annual growth rate on the low end about 27%, high end about 34%. So when I look at Cake here, it's a very attractive. And they've been, like I said at the beginning, it's not just about the reward potential with these stocks, incredible, gains that could be coming in these stocks. It's about, Cake's been through it. They've been through recessions, many of them, right? They've been through the highest inflation in many decades. They've been through all this stuff, horrible consumer sentiment. They've been through all of it. And at the end of the day, they make it out and they get stronger on the other side. So my opinion on Cake as far as buy levels. Now, this is for the next year. Keep in mind, Cheesecake 3 years from now, 5 years from now, or 7 years from now, or 10 years from now, I might be willing to pay a lot more for those shares than I'm willing to pay right now and over this next year. So for all these stocks I'm about to talk about, and I give you my load the boat number, my strong buy number, and all those sorts of things, just keep this in mind. Those numbers are really thinking about this company over the next year and what makes sense to buy, right? Given the risk reward profiles. So load the boat on Cake. What is that? That's under $40 a share. Any Cake that's under $40 a share, load the boat. Buy heavy, under $50 a share. Slow down on buying is kind of that 50 to 60 range in my opinion. And then as far as to stop buying, if it goes over 60. So if it goes over 60, which could happen. I mean, it could happen in the next year. Once people begin to realize the opportunity with North Italia and the opportunity with Flower Child, I think it's going to wake up a lot of folks. And I think they're really going to start to see that over the next year. Lower rate environment, which is great for expansion for Cheesecake. Keep in mind, these companies usually take out debt to build all these new locations. And so a lower interest rate environment, which we're going into, very good thing for Cake. Additionally, it's a big dividend payer. Guess what? A lot of people are about to flood over to dividend stocks because what you're going to be able to get on savings account and CD accounts is going to continue to go down and down. The Fed lowers interest rates. And so more and more people want to funnel into Cake. So could Cake go to 60 plus in the next year? I wouldn't be surprised. But that's kind of, if it goes over 60, it goes to 65, 70, I'll stop buying cake, and it will just be a hold for me at that particular time. But for now, I'm kind of loading the boat, trying to buy as many shares as possible. How would you like access to all my best course curriculums? My Becoming Master of the Stock Market course, my Stock Market Investing Mastery course, my Stock Options Mastery course, my Millionaire Playbook. How would you like access to all my best courses, as well as the ability to have access to my 6 and 7 figure plus Discord community, where we're constantly keeping in touch with each other, talking about what's going on in the market? How would you like exclusive weekly videos from me? How would you like the ability to see what stocks I'm buying and selling in my $2 million plus Fidelity account? If that all sounds pretty interesting to you, apply to join my private group. That is going to be linked in the description area down there. You can click on that, fill out an application, and go ahead, hop on a call with Andre. Andre will walk you through the whole process. He'll walk you through the whole group, and you can go ahead and join us in there. Once again, the link for that is in the description area. Now, cheesecake. This is a run. So cheesecake's up about 10%. Now, this is a restaurant stock. So 10% a month with no earnings, that's a historic run. Like, this is insane. This is a restaurant, right? Now, I think there's two things going on here in regards to cake. One is, we know we're going in a lower interest rate environment. That's phenomenal. Cheesecake Factory has a lot of restaurants to build. Between North Italia and Flower Child, they have a lot of restaurants to build over this next 5-10 years. So if we could be in a lower interest rate environment, that would be ideal for cake. And I think that's definitely going to benefit them. And I think that's one of the reasons people are looking for the stock. I think the second small reason is it's got a big dividend yield. So I think people are starting to look for yield, and Cheesecake provides that, right? And the third reason is, I think actually finally some people are starting to wake up to the fact that Cheesecake has two brands that are going to become national brands across the United States of America, right? North Italia and Flower Child. They have not one concept, but two concepts that you're going to see expand all across the United States of America. And they're the only ones that are in that position as a restaurant chain that has two concepts that are about to go national over the next 5-10 years and become like huge brands that are going to be known in every major city out there, right? And so that's just an incredible opportunity. So I think some people are starting to wake up to that. And that's why you're starting to see more and more momentum come in that name. And as somebody that wants to hold this stock long term, this stock could be $200, $300 stock someday. I do not want to sell any shares of Cheesecake, right? How would you like access to all my best course curriculums? My Becoming Master of the Stock Market course, my Stock Market Investing Mastery course, my Stock Options Mastery course, my Millionaire Playbook. How would you like access to all my best courses, as well as the ability to have access to my 6 and 7 figure plus Discord community, where we're constantly keeping in touch with each other, talking about what's going on in the market? How would you like exclusive weekly videos from me? How would you like the ability to see what stocks I'm buying and selling in my $2 million plus Fidelity account? If that all sounds pretty interesting to you, apply to join my private group. That is going to be linked in the description area down there. You can click on that, fill out an application, and go ahead, hop on a call with Andre. Andre will walk you through the whole process. He'll walk you through the whole group, and you can go ahead and join us in there. Once again, the link for that is in the description area. Bull market won't be derailed.
Middle East affairs. You are certainly not unfamiliar to how geopolitics affects the investor psyche and affects investment planning. When you have something like this that for a lot of people was a surprise, what is sort of the first thing that you look to in terms of telling your clients, your colleagues, your peers to do next?
Well, the important thing is to separate the noise from signals. And I think unfortunately, or perhaps fortunately, and I don't mean to sound dismissive, the markets have been conditioned in the last few years to react temporarily to these issues. They will bid up safe haven prices, gold, oil, treasury prices. But then as soon as they get the all clear signal that things are under control, they'll put it behind them and go back to whatever they were doing. So long we don't get further escalation in the coming days, I think the market will look past it. Now, one of these days it will be proven wrong, because I do agree something has to get worked out in the long run, and the conflict seems to just be escalating.
I am curious about the cumulative effect of various sort of wars and other conflicts. Obviously, you have what's going on between Iran and Israel. Obviously, the Ukraine-Russia war continues to go on. You have other big geopolitical disruptions going on around the globe, not to mention a changing of the guard in terms of presidential elections around the globe that are really going to reshape foreign policy. This is much different right now, what we're seeing, than maybe what we've seen in past cycles here. How do you adjust?
I think you want to weigh the different issues. I think at least in the near term, I think the bigger catalyst is the U.S. election. If you have a Harris administration with a Republican-controlled Senate, that will be viewed as largely status quo. If you have a Trump victory, I actually think that's going to be very disruptive as far as the foreign policies, pertaining to the war in Ukraine, support for Israel, whether it gets, more assertive, and also the tariffs issues. So potentially the election can turn out to be more disruptive.
In terms of just the U.S. markets and how they respond to these exogenous events, I think about what happened with China, the week-long stimulus package that they announced, and how little impact it had on the U.S. market overall in terms of lifting sentiment and really inspiring people to go outside the U.S. And then you have the news today with Iran attacking Israel. And yes, there's certainly a movement in stocks and in oil, but if in the long term people are going to look past it, what is it about the U.S. market that has its participants looking inward as opposed to digesting the headlines from outside?
I don't know if I agree with what he said there about if T-Man is in office, things are going to be more uncertain in regards to that. I don't know if I feel that way, to be honest. I think he knows how to talk to a lot of these folks in a good way. And the other good thing about him is he's a little bit unhinged. I think everybody can agree on that and everybody knows that. And because he's unhinged, people are actually, I think a lot of these other leaders actually do fear him. They might not like him. They might think, he's whatever, right? But at the end of the day, I do think actually they fear him a little bit because he's, if you have a typical person in there, you know what they're going to do. Like, how they're going to react. Like, if Harris is in office, you know what she's likely going to do. You know the decisions she's likely going to make in regards to dealing with these other countries, right? T-Man, you don't really know. Like, he's a little wild. Like, he's a little crazy, right? And so if you're another leader of another country, you kind of fear that. You're kind of like, crap, man. Like even if he sends a threat, you kind of start to have to think like, because he would send a threat that no one else would send, right? And then you got to start considering like, does he mean it? Like is he for real on that? Like maybe he is. Right? And so I don't know. Like I just don't know if I agree with him in regards to things would be more uncertain. They might actually be more certain.
I think over the last 10 plus years, investors have been conditioned to overweight the U.S. So we tend to dismiss what happens overseas. In fact, you hear a lot of people saying that China is just uninvestable. And then last week, we get a sudden surprise with a pretty strong stimulus on the monetary side and also the PBOC lending money to companies and investors to buy stocks. So you get a nice pop in the Asian market. So temporarily, that could mean outperformance by emerging markets. But again, the election could be disruptive because depending on the tariffs policies, right, that can...
The tax seems to be ineffective. That could be on purpose too. It could be more to send a message than anything.
Again, disrupt the emerging market rally.
How much are you seeing your clients ask you about the election? Because you point out all these different scenarios, but we might not get an answer until as late as January.
Most people are obviously interested, but we tend to have a very long-term view. So the strategic allocation has not been altered. In the meantime, tactically, you could play out a different scenario. So, for example, if you have a blue sweep, I think the market will probably view it as somewhat negative for equities and positive for bonds. If you have a red sweep, that's potentially more inflationary, so it's negative to bonds. But then equities may do well on the belief of deregulation, potentially lower taxes. If you have a slick government, it's probably muted impact.
I am curious, though, we talk about some of the tailwinds for this market heading into this election. Interest rates finally coming down, an economy that's at least doing better than I think what people had anticipated here. No matter what the outcome of that November 5th election, is it possible that those tailwinds could outweigh any potential negatives we get from the election itself?
Right now, the thesis is synchronized global easing, with the exception of Bank of Japan. I counted in September, we've had 25 rate cut announcements across the globe. So people will
Since September, 25.
25 across the world. So that's the thesis. But then if you have a Trump victory potentially driving up inflation with new tariffs, potentially higher economic activities, would that then disrupt the rate easing, the interest rate cutting cycle that the market is pricing in? So I do think potentially there could be some risk to the Treasury market.
Are you concerned at all about some of the other risks that have been bubbling up? We have a port strike that just started today that could have significant economic consequences should it drag on for weeks rather than days. We have another strike over at Boeing that's still unresolved, as well as a lot of other issues that have the potential for an inflationary impact as well as an economic impact.
Yes, I do agree. These are really good points. Depending on how long they last,
That's true.
There is an impact on inflation, and that could potentially disrupt the market's complacency about the interest rate cutting cycle. And at some point, inflation could still make a comeback once everything settles down, especially with central banks being so aggressive on the easing side.
As much as you say that investors are conditioned to look past these headlines, these hiccups from overseas, are these latest headlines enough to at least derail or snuff out the bull market? I mean, are we done with making new record highs?
Well, given that we've done so well in the second half of September, so a little bit of pullback is normal. I don't think it's enough to really derail the bull market. So anything, maybe a 5% pullback, and then the focus in 2 weeks will be on the earnings season and then the elections.
The funny thing is, there's been so much crap the last 2 years, right? Like, so much crap. Like, Fed raised rates so high, they kept them up there for so long, right? And you have all this geopolitical problems, you have multiple wars and multiple fronts, you have so much stuff, right? And yet, it has been such a great time to make money in the market. With all the uncertainty, with all the problems, so much money to be made. The thing that kind of worries me is eventually we're going to get to more normalized times again. And it's going to look like smooth sailing. And that's when when I say everybody, I'm talking about like the retail folks are really going to enter the market en masse. And that will be the time the stock market drops off the cliff. That will be the moment when everything looks like coast is clear. Oh, everything's great again. It's calm waters. Go ahead, get in. That's when the freaking hurricane hits, man. And the next thing you know, like the whole market just dumps hard, right? It just, oh gosh, because you got to think like there's been so much crap the last 2 years that has really transpired. That could be looked at as negative. This is negative. This is negative. This is negative. And yet at the end of the day, oh my gosh, could you imagine not being in the market let's say you sold your stocks 2 years ago, right? You're like, oh my gosh, inflation's still a problem. Interest rates are insanely high. They're going to keep them high for a long time. It's going to be bad consumer confidence. It's going to be bad business sentiment. It's going to be blah, 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 right? All these issues. I mean, can you imagine the amount of money you would have missed out on? Like the public account 2 years ago was probably 1.1 million or maybe 1.2 million, somewhere like that. If I go back 2 years ago today, the public account's $2.4 million now. If I would have sold all my stocks 2 years ago, I would have, maybe 1.1 or $1.2 million right now, right? And I'm sitting on that cash. You say, well, I could have earned interest having it at 5%. Well, yeah, still, it wouldn't have been that much additional money. Versus I have $2.4 million in that portfolio now, all with minimal contributions. So, my gosh, would that have been a mistake? And sure, I would have been right about, wow, there's so many problems in the world. There's so much to be concerned about, so much to be scared about. But I've been 100% wrong to just missed out on a ridiculous amount of money. A ridiculous amount of money. Crazy. 7 figures plus. And this was in that one portfolio. Never mind if I did that across all my different portfolios, right? One portfolio. 7 figures. That's wild.